Okay, for this video, I wanted to cover the IRS Form 1040 Schedule 3. So Schedule 3 is for additional credits and payments. This schedule is attached to your Form 1040, 1040SR, or 1040NR for a non-resident return. So I just want to go through each line item at a high level kind of discussion, point out when you might need to complete these fields and what additional forms the schedules might be required to be attached to the tax return itself. So if we start at the top, Part 1, non-refundable credits. Okay, so non-refundable credits meaning that these are tax credits that can offset your tax liability, but you can't be refunded in the sense that if the non-refundable credit exceeds your liability, you'll get actual cash back from the federal government, right? So it's a dollar for dollar offset, but it can't be in excess of zero to get you money back. So starting at the top, line 1 for the foreign tax credit, the 1116. So you as a U.S. taxpayer are required to report all of your income, whether it's U.S. or foreign source. If you have foreign source income and you are also subject to foreign taxes on that income, then you may be eligible to take a foreign tax credit for what you paid in the foreign country. So in this example here, we have John Q. Taxpayer. He has some dividends that he reported on his tax return that he received from a foreign country. And he owed $20 to the foreign country, which was withheld from the dividend income. So in this case, he's taking a foreign tax credit for the $20 he paid to that foreign jurisdiction. Line 2, credit for child independent care expenses. If you have a child that is your dependent, right, and you pay for child care, you may be eligible for a tax credit to recoup some of those expenses. And in order to recover that, you would include the Form 2441, and whatever the amount is that is creditable would be entered here on line 2. Education credits, so the 8863 is, for example, the American Opportunity Tax Credit. So if you're paying for college education, you may be eligible for a tax credit to reduce your tax liability based on however much you spent at the university. If you don't qualify for the credit, that's okay. You might be eligible for a tax deduction instead. That would be the Form 8917. And that would be reported on one of the other schedules, right? You wouldn't report that here on the additional credits schedule. Okay, so retirement savings contribution credit, the 8880. If you are effectively a low-income taxpayer, so generally if you make less than, let's say, $30,000 a year, if you contribute money to a traditional IRA or a Roth IRA, not only with a traditional IRA, you get a tax deduction for the contribution, but you may be eligible for a tax credit as well. And so that's what the 8880 is designed to achieve here. If you put money into an IRA, there is a credit computed based on the amount you put in, and then that will be eligible to be placed here, and then it can also reduce your tax liability. So keep that in mind. If if you're making contributions to a Roth or traditional IRA, and your income is below certain thresholds, you might be eligible for a tax credit. Residential energy credit, 5695. This is something like solar improvements to your home. If you make certain energy efficient improvements to your property, you might be eligible for a tax credit, which is computed based on the amount that you expended to renovate the property. And that tax credit can also help reduce your tax liability. So other credits here, 3800 and 8801. The 3800 credit is a general business credit. So for example, increasing research activities, right? If you're invested in a company that is increasing research activities, they're expending money in that space, they might be eligible for a credit that gets passed on to you. And so you would report that on the 3800 and ultimately line 6 here. 8801 is a credit for prior year minimum tax. So if you paid AMT or the alternative minimum tax in a prior period, you might be eligible for a credit in the current period for the amount or a portion thereof that you paid in a prior year. Okay, so that covers Part 1. For Part 2, other payments and refundable credits, the net premium tax credit, 8962. So the net premium tax credit, this is attributed to your health care, right? So if you enrolled in one of those eligible plans pursuant to the ACA, and you received an advance credit, right? So if your premium for health insurance is, let's say, $500 a month, and you got a advance premium credit of $400, the net amount you're paying in every month is $100, right? So that's how it helps lower your monthly bill by taking the advance premium credit throughout the year. Now, where this 8962 comes into play, if in fact you didn't get enough, right? So if you didn't get enough premium tax credit throughout the year, based on your income, you might be eligible for a little more money to help offset the cost of those health insurance premiums. So line 8 would be a reduction to your tax liability for the extra amount of premium tax credit that you should get to cover the cost of your health care. Line 9, amount paid with request for extension to file, is pretty straightforward. If you filed a 4868 to extend your Form 1040, if you made a payment with that extension, the payment amount would be reported here. Okay, the amounts of estimated payments you made during the course of the period would just be reported on page 2 of your Form 1040. But if you made specifically a payment with your request for extension to file via 4868, that amount would be reported here on line 9. Excess Social Security and Tier 1 RTA withheld. So if your wages had too much Social Security tax withheld, you would effectively get a refund of that, and that does happen sometimes inadvertently. So the excess refunded tax would be reported there. Credit for federal tax on fuels, 4136. So there are some credits available if you purchased fuel for use in your trade or business, right? You're allowed a tax credit for the amount of tax that's being levied on a per gallon basis. So normally this is a pass-through item. So like, for example, John here, if he's a shareholder in an S Corp and the S Corp is filing 1120S and it wants to take that federal tax credit on fuels, it would do all the paperwork, and then it would pass through the amount of credit that John is eligible to take on his tax return, and he would include a 4136 and report those pieces. Okay, so line 12 here, 12A, we have Form 2439. So this is kind of an obscure form. It's for undistributed long-term capital gains from a RIC or a REIT. So REITs are real estate investment trusts. RICs are registered investment corporations. If that company makes has to have a deemed distribution of long-term gains, what they'll do is you'll have to record that income, and then they will also likely withhold tax and pay it on your behalf. And so the amount of tax that's being withheld and paid on your behalf would be reported here in line 12A. So you do get a credit for the amount of tax that's being paid on those undistributed earnings. Qualified sick and family leave credits, so Schedule H for household employees and Form 7202. So there are tax credits if you're self-employed or if you have a worker and the individual or yourself rather had to take sick and family leave. This came up very often during COVID. People weren't able to work, and if that's the case, you were eligible for a tax credit to try to, again, help alleviate your overall tax burden for the year and put a little more extra money in your pocket. Then let's see. So the health coverage tax credit, 8885. This is on the 2020, but it was basically this mechanism expired at the end of the year, so it's no longer relevant for 2021. So won't really touch on that because you can just ignore that. You won't see that on 2021 tax return. Deferral for certain Schedule H or SC filers. What they're talking about there is the Social Security tax, the Medicare tax, those self-employment taxes that are paid at these levels. In certain cases, you might be eligible for a deferral, right? Meaning that whatever the amount is that's computed based on your net earnings, a piece of it, typically attributed to the employee portion, can be deferred. So it'll reduce your overall taxes for the current period, and then in the following period, you would have to, effectively pay the amount that was deferred. So you still owe the money, but better off paying it a year from now than paying it today. That's the logic. Okay, so that covers it for Schedule 3. I hope that was helpful. I'll leave some links below for some of these other schedules that I've done videos on that you can reference. And I look forward to seeing you again soon. Thank you.